Prices jump 20% in early Monday trade following weekend's drone attack on Saudi oil facility Aramco. Federal government says Nigeria will not sell out her interests to extortionists. Now, sell pressures wanes in Nigerian's stock market, propelling weekly gains. The program is Business Express, reaching you from Abuja, the nation's capital, on the network service of the Nigerian Television Authority. I am Amina Nujaim. Welcome to the program. Nigeria must have stable macroeconomic conditions and business climate that will keep transactions costs low, thereby encouraging savings, investment and job creation. Minister of Finance, Budget and National Planning Zainab Ahmed, at a briefing ahead of the 25th Nigeria Economic Summit, said this year's edition will be setting a new agenda for Nigeria to key into the fourth industrial revolution.
Achieving this will in no small measure build a competitive private sector economy that will guarantee the needed economic prosperity of Nigerians. This year's summit will be setting a new agenda for Nigeria to key into the fourth industrial revolution.
Only a competitive private sector-led economy can achieve a rising standard of living and economic prosperity for more than 400 million Nigerians by the year 2050.
The minister also inaugurated the board of directors of the Family Homes Fund, a federal government initiative to bridge the housing deficit. She informed them the federal government expects a financially sustainable fund and expects them to raise significant third-party capital after initial capital commitments from government. And the federal government says it will continue to protect the interests of Nigeria and her citizens. Attorney General of the Federation and the Minister of Justice, Abubakar Malami, gave the assurance in Abuja, maintains that government under the watch of President Muhammadu Buhari will not sell out the interest of the country to satisfy some elements who are all out to extort the people, while Nigeria will be willing to meet the terms of agreement reached with genuine investors. Malami pointed out that the present administration will not allow fraudulent local and foreign collaborators to rip off resources of the nation. The minister says from the award of the purported contracts to the Process and Industrial Development Limited, it is clear that it is a well-organized scam with the intention to defraud Nigeria. OPEC Secretary General Mohammed OPEC Secretary General Mohammed Barkindo has expressed satisfaction that the situation at Aramco has been brought under control by the Saudi authorities. Barkindo and IEA Chief Faith Boral Monday repeated call that security of oil supply remains top priority of all producing countries. Both chiefs agreed to continue to monitor the oil market development and keep regular contact in the next couple of days. OPEC sources say no need for extraordinary meeting for OPEC plus producers now. And Bala Zaka joins us from Lagos. He is an economic analyst and will be throwing light on the recent happenings around the globe and Nigeria's development plan. It's good to see you on Business Express.
Thank you.
Okay, the oil markets, that's in the news. Nigeria just last week made public the MTF for 2020 to 2022 with the benchmark put at $55 per barrel. Now, with the recent developments in Saudi, how do you see this playing out considering Nigeria's budgetary projections?
First of all, Nigeria is an emerging market and a development economy. Nigeria is a member of the global oil cartel called OPEC. The benchmark that Nigeria has put this time around in line with the MTF and 2020 budget is in order. $55 per barrel looks good to me, because generally I always appreciate a kind of differential between the global crude oil price and the benchmark of like maybe between like say 10 and $15. So if the Brent is going for like 66 or $65 per barrel, and the West Texas Intermediate is going for like 60, having a benchmark of $55 per barrel is really realistic. And apart from that, global bodies or institutions like OPEC, which is the Organization of Petroleum Exporting Countries, International Energy Agency, and Energy Information Administration have predicted that there is likely to be additional production from non-OPEC members, principally led by Russia and other countries. And with that, I don't expect the price to really go up so much. So when we are conservative with our benchmark price, that will be excellent for us, and it will reduce the degree of deficit.
You says the numbers are not too far off. Now, with the alignment of the budget and the ERGP, do you see this favoring the Nigerian economy?
Well, I probably didn't get your question completely, but there are certain things that we just need to look at that are likely to face Nigeria. Looking at 2020, the first one, like we basically all discussed, we are looking at the production figures. We are already looking at 2.18 million barrels per day of crude oil, including condensates. That is fantastic to me. That looks okay and reasonable. Then when you look at other indices, when you look at inflation, the figure we put it also looks fairly reasonable. First of all, inflation is a macroeconomic index, but it is also dependent on indices, microeconomic indices like demand and supply. So we really hope that there will be stabilization, first of all, in the production of goods and services, and that will make things to go down.
Let me come in here. Now, looking at the risks, what would Nigeria have to pay attention to with the growing concerns with population outweighing economic growth? What would your thoughts be on that?
When you look at it generally, I mean, okay, this time around, let me look at the likely challenges that are going to face Nigeria. First of all, we've been talking about the recent judgment debt. When you look at that judgment debt of probably more than about 9.6 billion dollars, that is likely going to impact on Nigeria. Looking at Nigeria's current debt profile and our planned debt servicing approach, that will definitely impact. Of course, we expect that prices of crude oil will not be as high as we have probably in 2019. That will affect it. Then reasonably again, when you look at insecurity, insecurity is really eating into our meager revenues. So if we can do something about the degree of insecurity, that will help. Because the more we are able to contain insecurity and bring it down, then the more we are able to get some good monies that we can deploy into other areas. Then something that we really need to take serious and watch out for has to do with diaspora contributions or diaspora remittances. Because the recent hostilities that Nigerians are experiencing is likely to it's likely to affect diaspora contributions. So all these are likely to affect us. And generally, like we know, the population growth rate in Nigeria is higher than the GDP. Something just has to be done about it. And when you look at the GDP generally, based on our projection of 2.93 for 2020, it's something that can be achievable. Because if we do something about the consumer index, the higher the disposable income, the better for us. And if we are going to have relative control of security issues, then that means investment will improve. But something that we must watch out for and that has always been affecting Nigeria has to do with the differential between export and imports. Most of the time, that differential is negative. And that negative differential between export and import is not in the favor of Nigeria. And fundamentally, if we take that into the recent agreement that we signed of the African Continental Free Trade Area, it's going to go either ways. If we have so much to export, we are really going to benefit from that because everybody is looking up to Nigeria to provide the leadership. If, for instance, we can refine our petroleum products locally and export them towards West Africa, we will generate so much. We have gas. From gas, you have ammonia. From ammonia, you have urea, and you can produce fertilizer. If we can start exporting that towards West Africa, we are going to really make so much.
Let me ask you about the AFCFTA. Is the agreement a blessing to Nigeria?
Agreement today is a 50-50 thing. It's a pendulum movement. It's going to be like a two-prong approach. It depends on what Nigeria wants to do. Fine, Nigeria has signed, and there is supposed to be what we call trade liberalization. But the question is this: what does Nigeria have to export? That is the fundamental question. Because if we don't have something to export, then we are likely to remain a dumping ground. And that was why we said we should look at certain things internally that we can think about exporting. And the first one, like I said, is we are a major gas exporter. And from gas, like we said, from natural gas, you will get ammonia. From ammonia, you will get urea. And from urea, you can get fertilizer. If we can start producing fertilizer internally to make good money, if we start refining our crude oil internally, then that means we can start exporting diesel, petrol, lubricant, resins, and other byproducts or distillate of crude oil. If we can do something about the cocoa that we have, start processing our cocoa to produce the chocolate and the rest, then we will take advantage of that. But if we don't, we are likely to become a dumping ground for products from other parts of West Africa, and that will not be positively good for us.
Talking about oil, with the recent development in Saudi, there's a rise in oil prices. Would you say it is a blessing for the Nigerian economy?
I I would not be happy to say that, because what has happened is an economic sabotage. What has happened is economic hostility on crude oil and gas facilities. And apart from Nigeria being an oil and gas producing country or nation, we are also a member of OPEC. And Saudi Arabia is a very strong member of OPEC. What I feel is this: yes, we're likely to scoop in little money, but it is in a sober manner. Because what actually happened to Saudi Arabia is a sabotage on their facility, and as an OPEC member, we should feel sorry for what happened and should be in solidarity with them. But whichever way we look at it also, this is something that is going to be temporal. We expect that in a maximum of probably 1 week or maximum of few weeks, production will be restored. But the real one that is going to be of concern has to do with OPEC and OPEC members and cartel, and the kind of hostilities that may come from non-OPEC members in trying to make sure they create a glut in the global market and global crude oil prices.
Now, let me take you to a bit of revenue generation. With the consistent challenges and rising debt concerns, what do you make of the fact that states still have to rely on monthly allocations to survive? What would be your take on that?
Well, for states, the process has started, but one thing we have to do is to look for ways to make sure the states are viable and productive. And one of the ways we can do that is to look for ways of encouraging them. Continuous reliance on debts, whether local debts, domestic debts, or foreign debts, will definitely not help. But if you look at Nigeria as a country, honestly, somehow, somewhere, Nigeria is blessed. Because if you regionalize Nigeria, there are different things that can be produced. I mean, when you look at the northern parts of the country, from the northern parts of the country, we can produce enough food to feed this country and export some. When you look at the middle belt of Nigeria, we have so much solid minerals that we can export. When you look at the southern parts of the country, or South in particular, where you have the prolific Niger Delta Basin, I mean, you are basically talking about where we derive probably 80% of the oxygen of our revenues. From that, we can make so much money. If you look at the southwestern part of the country, you are talking about commerce. So with commerce, there is so much. Then when you look at the southeastern parts of the country, I mean, you're talking about basically manufacturing, you're talking about creativity in production. Just imagine a situation where we will take a place like Aria and Onitsha and convert them to a market hub where other West African countries or other people from different parts of the country will come shopping. So somehow, somewhere, nature has regionalized our country such that we have so much to gain. But as far as individual states are concerned, in difficult moments, they need to be assisted, but they also need to be made to understand that to be political leaders is not enough. Our governors must be very good economic managers and leaders.
Hey, Bala Azaka from our Lagos Network Center, thank you for your insight on these developments. It was a pleasure having you on the program.
Thank you.
Now, stocks rallied in the last 3 days of the second trading week at the Nigerian Stock Exchange, propelled by relative political stability over last general elections. Let's join Bosede Abel for an update of the performance in the week ended Friday, the 13th of September. And by the way, it wasn't a nightmare for the Nigerian economy.
The equities market recorded mixed performance for the second week of the month, but ended upbeat following results from the presidential election petition cuts. In week ended 13 September, the NSE All-Share Index and market capitalization appreciated by 2.33% and 2.39% to end at 27,779 and 13.5 trillion naira. All other indices finished higher, with the exception of the NSE Insurance and NSE Industrial Goods indices, which depreciated by 2.13% and 0.41%, while the ASM index closed flat. A total turnover of 1.1 billion shares worth 14.082 billion naira exchange hands on the floor of the exchange in 17,980 deals. The financial services industry led the activity chart with 840.7 million shares valued at 10.7 billion naira traded in 11,331 deals. The conglomerate industry followed with 111.2 million shares valued at 243.1 million naira in 963 deals. The third place was occupied by the ICT industry with a turnover of 95.087 million shares worth 605.1 million naira in 404 deals. Trading in the top three equities, Guaranty Trust Bank PLC, Access Bank PLC and FBN Holdings PLC jointly accounted for 484.003 million shares worth 8.3 billion naira in 4,265 deals. A total of 6,540 units of exchange-traded products (ETPs) valued at 23,650 naira 70 kobo were traded during the week in 5 deals, while a total of 274 units of federal government bonds valued at 280,932 naira 40 kobo were traded in 7 deals. 39 equities appreciated in price during the week, 19 equities depreciated in price, while 108 equities remained unchanged.
Thank you, Bosedi. Now, stocks failed to sustain the bullish run as the OSHA index dipped by 0.74% at the end of the session to close at 27,574.32 points. Market capitalization 13.4 trillion naira. The volume of trade stood at 271 million, valued at 2.9 billion naira in 4,795 deals. Financial services dominated activity, led by MBNH, Guaranty Trust Bank and Access Bank. Now, global stocks were mixed as concerns over trade war wanes. Bosede Abel again has details.
On the global scene, market experienced positive boom after U.S. President Donald Trump said he would consider an interim trade deal with China. This came after sentiment around the trade war improved. Also, the cut of deposit rate by 10 basis points and launch of new bond buying program by the European Central Bank (ECB) helped shore up sentiment. Nikkei rose 1.05% to close at 21,988.29. Hang Seng Index added 0.68% as of its final hour of trading, while Shanghai Composite topped 0.75%. European stocks were mostly positive. DAX gained 0.47%, CAC 0.22%, and FTSE also gained 0.31%. In the United States, the Dow Jones Industrial Average posted its first 8-day winning streak in more than a year. It closed 37.07 points higher at 27,219.52, while the S&P 500 slipped 0.1% to 3,007.39. The Nasdaq ended the day down 0.2% at 8,176.71, while in Africa, stocks were mostly mixed amid xenophobia attack in South Africa.
Now, still talking oil. 48 hours after the drone attacks on Saudi oil facility, Brent crude price reopened early Monday, appreciating between 15 to 20%, its biggest jump in 28 years, in what may be a windfall to exporters such as Nigeria. The weekend attack has resulted in the single worst disruption in oil markets ever, surpassing the loss of Kuwaiti and Iraqi petroleum supply in August of 1990, when Iraq invaded its southern neighbors. The drone attacks on a Saudi oil field and crude processing facility, the world's largest, knocked out more than 5% of global oil supply. Let's now see how commodities are faring in the local and global markets. That's a wrap on Monday's edition of Business Express. All previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is at NTA News Now. The hashtag is BizX. Business Express returns on Wednesday. I am Amina Nujaim. Thank you for watching.